Internal Revenue Service IRS tax news. Give tax withholdings a fresh look as 2021 year-end nears. Looking at your IRS tax withholdings, it's a great Halloween activity. You could skip the scary movie for a night, watching instead your IRS tax withholdings tick up. It's more scary than getting a home visit from the booger man coming to pick your nose. The IRS, in essence, doing the same thing, but somehow able to pull money out of that cavity. In any case, IR 2021-199, October 8th, 2021, Washington. The Internal Revenue Service reminds taxpayers today that the last quarter of 2021 is good time to check withholdings. So remember, there's going to be a lot of changes that has been happening to both the tax code and the economy and people's job situations. Therefore, that relates to a lot of uncertainty about what's going to happen year to year on the taxes. The only way to really get ahead of things and understand what is going on is actually to do, in essence, projections to determine how much you would withheld, even if you're doing a W-2, like you're an employee, or in the event that you're doing some contracting work, possibly gig work, or if you have some Schedule C type of business. So remember how it normally works. The general idea with withholdings is that the IRS wants their money as you earn it during the year. So 2021 is passing right now. The IRS wants to get paid during 2021. If you are an employee, then you have to fill out the W-4 form, and your employer is the one that's required to enforce that withholdings, taking the money directly from you in accordance with that form, giving it to the IRS, and then informing you of the money that they took out on the pay stub as well as the W-2, also giving that information then to the IRS. Now, even that could change from year to year, because if you have multiple employers, meaning you work for multiple different people, or if you've changed jobs from year to year, then that withholding system can get a little bit different. In other words, you're probably basing your withholdings on the prior year in order to estimate what's going to happen in the current year. However, if you're changing jobs a lot, or you have multiple jobs, or you now have different jobs between different members of your family, spouses working in different combinations, it's going to be more difficult to compare to the prior year. Also, there's been big changes, and not just with things that affect upper income individuals. There's been changes with regards to the child tax credit and, these kind of refundable tax credits, which could have impacts to many different people. So even if you have a fairly basic return, you might need to kind of refresh and look into what your withholdings should be. You got to do that. And why would you want to do that? You want to do that to avoid the stick being penalties and interest. If you do not pay during the year, and even if you had the cash flow to pay when you file the taxes, then the IRS might say that you paid late because they want their money during the year, and therefore they could charge you penalties and interest. So that's going to be the general idea. So you can look, and you can use basically IRS software, which is getting much better to help, and it's kind of a projection tool really these days, to help to determine what your withholding should be, taking into consideration your income sources during the year. And then you would need to adjust for whatever adjustment it shows in the current year, either filling out another W-4 to increase the withholdings for this year, or making actual quarterly payments. If you do need an adjustment at this point in time, the last quarter, then it's likely that you'll have to adjust it for the last quarter of 2021 to avoid penalties and interest that would be accrued if you don't. And then you'll have to adjust it again in January 2022 so that you can then get your withholdings properly fixed for the entire year. Hopefully things will standardize after that point, and you won't have to worry so much about doing these withholding calculations every year, because you can kind of rely on the prior year and some consistency, hopefully at some point, in the tax code. So life brings constant changes to individual financial situations. Events like marriage, divorce, a new child, or home purchase can all be reasons to adjust withholdings. So if you had a big event, that would be another thing that could happen, of course. And even if you didn't have a big event this year, because of the changes, a lot more people are fluctuating from different jobs, picking up different jobs, having gig work in addition to their current job, and going off and on unemployment. What's going to be the situation with unemployment and all this kind of stuff. So a lot more people probably cannot rely on the prior year to estimate their withholdings, even if they didn't have a big event, and may want to do it like a withholding estimate at this point in time. But if you had a marriage or something like that, obviously That's going to take two people that had separate tax returns. The government, you kind of sees them as one person, right? They're two halves that are now one. It's beautiful. But now they're going to, you get taxed out with one, you got to think that. And then divorce, obviously, it's the same kind of thing in reverse, right? You get the two people that had one tax return and now they got two. A new child will have a significant impact, possibly more so these days because of the child tax credit changes. Home purchases, because of the taxes that would be involved, property taxes and interest. So those are going to be the big ticket items with, even if you didn't have like weird years happening these days, then you would want to look into the withholding estimates and do your tax estimates for those big items as well. So the convenient tax withholding estimator. So here's the tool, the link here to the tax withholding estimator, which is actually a pretty good tool. It's getting more robust in terms of what it can do for the calculations and estimates. Also available in Spanish, will help taxpayers determine if they have too much withheld and how to take an adjustment to put more cash into their pocket now. In other cases, it will help taxpayers see that they should withhold more or make an estimated tax payment to avoid a tax bill when they file their tax return next year. So in other words, it's possible that your withholdings are too high. In that event, they could tell you if they're too high, and you could lower the withholdings, and that would be good because you'd get more money per paycheck. But you're probably looking here to try to see whether or not you're clearing the minimum in order to not have penalties that will be happening, because that would increase your total bill with penalties and interest. So if you're too low, that's when the IRS is really threatening you with the whole, right? They're going to hit you with the stick of penalties and interest if they're too low. So items that may affect 2021 taxes, things to consider when adjusting withholdings for 2021 are coronavirus tax relief. So obviously we had this tax relief that was happening in 2021, which kind of adjusts a lot of people's behaviors and their income strategies and whatnot. So the tax help for taxpayers, businesses, tax-exempt organizations, and others, including health plans affected by corona COVID-19 disaster. There's a link to that here, by the way. Link to this as well. Disasters such as wildfires and hurricanes. Special tax law provisions may help taxpayers and businesses recover financially from the impact of a disaster, especially when the federal government declares their location to be a major disaster area. So if you're in a major disaster area in the year, you want to take a look at what are the implications or impacts that would be on your taxes with relation to that. So we have and there's a link to that here so you can look it up. Job loss, IRS publication 4128, tax impact of job loss. So we had a lot of people that are reformatting or rethinking their jobs, what they're going to do, and so on. So that obviously is going to have an impact when you look at the year-over-year withholdings from one year to the next. So this explains how this unfortunate circumstance can create new tax issues. Workers moving into the gig economy due to the pandemic. So a lot of people also, as they switch jobs or do whatever they're going to do with their job situation, could be picking up gig work at that point in time as well, and are going to need to know the tax implications of that. Note that if you're going from a W-2 job and you're picking up gig work, or you're doing any kind of your own business kind of thing, you want to have an understanding of the tax implications, because you're going to be paying, if you have income on it, if you got revenue that has to be taxed, you're going to have then the income tax that's going to be taxed, and you'll have the equivalent of like the payroll taxes, of which you'll have to pay both the employer and employee portion, kind of the same thing kind of thing, in the form of self-employment taxes. And a lot of people, when they move from a W-2 employee and they've never really had to think too much about the withholdings other than to fill out a W-4, then going into a situation where they have to actually make payments to the IRS, get behind on the payments to the IRS, oftentimes not even reporting their taxes. And that means that the IRS doesn't have your expenses. So the IRS then tries to charge you for just your top line income, your gross income, without your expenses. And you have the Social Security, and people get behind, even though they might have done quite well in terms of their business, but they get behind in terms of their taxes because they just didn't have an idea of exactly what's going to happen with regards to taxes, because they've always been an employee. So if you're moving into a Schedule C type of business, make sure you're looking into the tax implications and putting away the money necessary to take care of that so that you can continue to grow. So life changes such as marriage or childbirth. So clearly, the life changes. There's a link to that here if you want to look at more issues that are tax related to those things. Getting married or having a child are just a couple of life events that can affect your refund or how much you owe. Pay as you go. Taxes are generally paid throughout the year. There's a link to that here, whether from salary, withholding, quarterly estimated tax payments, or a combination of both. About 70% of taxpayers, however, over withheld their taxes every year, which typically results in a refund. The average refund in 2021 was more than $2,700. So notice they want you to get their money basically throughout the year in 2021. If you're a W-2 employee, you're gonna tell them how much to withhold with a W-4. The way the system is typically set up is that they're gonna try to set up the W-4 so that you withhold a little too much. They want to set up the withholding tables to line up to the tax rates so that you withhold too much, so that they can then give you a refund at the end of the year, which does two things. It allows you to realize that the IRS doesn't get shorted on their money because they get paid too much, and then they refund a little bit. And it also makes them look like the good person. The IRS is the nice person that's giving you money, and the government and your employer's the bad person that keeps taking money out of your paycheck, right? But you've got that situation. Now, if you're a self-employed individual, however, then again, you're going to be in a situation where you have to make the quarterly payments, and oftentimes might not be as used to doing that. You also might be able to say, hey, look, I don't know how much I'm going to make if I'm self-employed. If I moved into the gig economy or something like that and I'm getting paid by platforms, I don't know how much I'm going to make, and I cannot just record my taxes or pay the first quarter because it's a progressive tax system, meaning if I made like $10,000 in the first quarter, that I don't know that I'm going to make $10,000 for the rest of the year. And that would mean if I only made $10,000, I wouldn't even owe any taxes because I'd be below the standard deduction, and my tax rate would be quite low. But if my income went up over the year, then I'd owe more money, and the tax rates go up as my income goes up. So how in the world am I going to estimate how much I owe if I'm a sole proprietorship business? And the IRS basically says you got to guess, right? You got to guess. You can't wait till the year's over and then on April 15th of the following year figure out how much you owed and then pay the IRS, because you'll be late, because you need to pay them throughout the year, which means you've got to estimate not just what you made in the quarter. You got to estimate how much you're going to make for the entire year, and then figure out, how much you owe the IRS and pay them in essence quarterly. Now, you can also there's some safeguard provisions that you can kind of pay, from the prior year, kind of look an estimate on the prior year to safeguard against the amount of penalties and interest that might accumulate. But just in general, on a business side of things, you got to kind of estimate. You got to do that estimating process, which again is new to a lot of people when they first start doing that. So taxpayers can pay online, by phone, or from the IRS To Go app. There's a link to the IRS To Go app. They can schedule payments for future dates, which can be useful during filing season for payment plan payments or for estimated tax payments. So you can pay with your phone with an app while you're like on a roller coaster or something. I've never done that, but you could do it though. Taxpayers can also log onto irs.gov/account. There's a link to that here to view the amount they owe, their payment plan details and options, their payment history up to 5 years, any schedule or pending payments, and key tax return information from their most recent tax return. That's probably where I'd go to look into my payments and stuff, or where I do go in any case. And you might want to log into your IRS.gov account, because it used to be in the past, IRS.gov, they weren't as good as like online banking. They haven't been keeping up to date as much on having their online service and their presence be really useful to users. And they've been trying to actually do better on that. And they've been doing better on it, I believe, in part because they want to give out all this money. And in order to do that, in order to make that available to do, these prepayments and stuff, they have to have this access to their website and so on. So now the website is becoming more and more important. You can get more information more readily these days. And also, you probably want to get in there to get prepared for your next year filing season, because these prepayment type things are going to be things that you're going to want to get the supporting information on. In other words, stimulus checks. Did you get paid the stimulus checks? And then you got the child tax credit, which could be prepayment types of things. those are things that your tax preparer or yourself are probably going to be asking for, which you might get documentation from the government from, but you could probably look them up on your account. So you might want to look those up on the account. If you're a tax preparer, I would suggest that you get your clientele sending out emails to get them logged into that account, because you know you're going to be asking those questions. You're going to be saying, okay, did you get your prepayment child tax payments? Did you get your estimated payments for your stimulus payments and so on? So it would be a lot easier if they're logged into their account already and can basically just look that stuff up and give you that information. The Tax Withholding Estimator, the IRS Tax Withholding Estimator, makes it easier for everyone to have the right amount of tax withheld. There's a link to that estimator here. This is especially important for anyone who faced an unexpected tax bill or a penalty when they filed this year, or whose jobs or tax circumstances have changed during the year. It's getting more and more this tool like software that you can kind of use to project into the future, which is great. You can actually kind of almost do projections on it. You might even be able to help other people out, with their tax situation by using that in the format of kind of like a software to project, withholdings and earnings for the year. So the tax offers workers as well as retirees, self-employed individuals, and other taxpayers a user-free step-by-step tool for effectively tailoring the amount of income tax they have withheld from wages and pension plans. For more information about taxes, estimated taxes, and tax withholdings, see tax withholding at IRS.gov. There's a link to that here. There'll be a link to this in the description.